Hey, what's up, stock compounders? Brad here. So I want to do a Q&A today. And these questions come from you guys. I looked through my comments over the last couple videos and I pulled 6 questions out of there. So this is exciting for me. They're questions directly from my subscribers. So let's get into it. Question 1, how long will it take for my channel to hit 100,000 subscribers? I just crossed 2,000. It took about 3 months to get from 1,000 subscribers to 2,000 subscribers. So, I figure maybe I can double my subscriber count every 3 months. So let's do the math there. 3 months from now, I'll have 4,000. 6 months from now, I'll have 8,000. 9 months from now, I'll have 16,000. 12 months from now, I'll have 32,000. 15 months from now, I'll have 64,000. And then, 18 months from now, I hope to be crossing the 100,000 subscriber threshold. So a year and a half is my best guess at when I'll cross that threshold. And then if you do the math on that, it's really only 2.25 years. So 9 months longer than that, hopefully I'll be crossing the 1 million subscriber mark. So, it's a fun exercise here in exponential growth. I'm hoping that's kind of the path that the channel takes. Question 2, am I doing Magic Formula stock picks at the end of September? The answer is yes. I bought my first round of Magic Formula stocks at the end of June. It's not a big portfolio. It's more of a test portfolio where I'm putting $100 each into 5 different stocks. And I'm doing that every quarter. So at the end of September, I'm going to be picking the next 5 Magic Formula stocks, and I'll definitely put out a video about that. I want to mention one of my Magic Formula stocks is Garrett Motion. Whew, that is not a pretty picture. I think it's down 63% in the 3 months that I've owned it, facing bankruptcy at the moment, potential filing for bankruptcy on that one. So, but it doesn't really matter. The approach is not based on 1 or 2 picks. It's, a basket of 20 to 30 stocks each year. And the performance of the portfolio really comes from having those 20 to 30 stocks and a few of them just doing really well. So, it's kind of interesting that one is tanking, potentially going to 0, but I'm not fazed by that. Question 3, only 4% of my audience is females. Do you think that reflects the ratio of male to female investors overall? Do I have any specific advice to female investors? I don't think it reflects the ratio of male to female investors overall. I would imagine there's more female investors than that. Then that would indicate a 1 to 25 ratio. That seems very low. I hope that's not the actual ratio. I don't think I have any advice. The one thing I will say, in terms of temperament, the female investors that I know seem to be more long-term oriented, and there's more of a level-headedness. There's more of a patience that come out through the female investors that I know. And I think one thing that correlates with that, in our culture in the US here, it's so important typically for men to prove themselves by being financially competent, by making a lot of money. That's something that really drives kind of the male stereotype in the US, at least. And that can really work against male investors because, when you're trying to fill some kind of a need, some kind of a hole, you're trying to fill your self-worth by attaining this financial mastery or a certain bank account balance, that's a lot of pressure. And that can cause men to take more risk than is prudent. or intelligent. And obviously, when you take more risk, that can get investors into a lot of trouble, especially when there's a downturn or something like that. So I think females probably actually have an advantage in terms of temperament for investing. And I hope to see a lot more women get interested in investing. That would be awesome. And hopefully my female subscriber count increases as well. That would be great to see. But if any of you have thoughts on that, please let us know in the comments. Question 4, do I plan on cutting back the number of videos per week? So some of you know I've been making a video every day for almost 6 months now. And it is a lot of work. It's there's a certain amount of mental capacity that I have to set aside each day to make these videos every day. But to be honest, it's getting easier as I do it more and more. There's less energy that it requires to do that each and every day. And a huge part of it, for any of you who are thinking about making videos on YouTube, I don't do any editing on my videos. That makes it so much easier to stick to a big goal like that of making a video every day. So all I have to do is hit the record button, talk to you guys for 10, 15 minutes, whatever it is, and then upload and make a thumbnail and write a description and figure out the best tags. But I've gotten pretty fast at doing those things. So I think I'm going to keep it up, guys. I'm going to try to continue making a video every day. And I don't have a specific goal around that, but I think for at least the next 3 months, I'm going to aim to do that. I do have a baby coming in October. So, probably less than a month from now. And I know I was growing an Instagram channel last time I had a baby. This is going to be my second baby. And that definitely threw a wrench in uploading something onto Instagram every day. So we'll see how that plays out. You guys might see a dip in the number of videos I'm making for a couple weeks sometime in October. But, if that happens, that's the reason. So, question 5, how do the write-ups at Value Investors Club compare to those at Seeking Alpha? So I'm not a member at Seeking Alpha. I've definitely read a number of articles from Seeking Alpha that have been available to free members or non-members, as the case may be. I've enjoyed the quality at Seeking Alpha. My sense is that the write-ups, the theses, the submissions at Value Investors Club are a little higher quality than the articles on Seeking Alpha. I've really been impressed with the quality at Value Investors Club. If you go to VIC and you look at their About page, they kind of talk about what it takes to get a submission accepted into Value Investors Club. And it does seem fairly rigorous in terms of how they vet those. I remember, and I don't know if it's this way anymore, but early on in Value Investors Club, Joel Greenblatt was saying, in order for a submission to get accepted, he was a college level professor, he'd have to give that paper like a 98 or higher in order for it to get accepted. So, I don't know if that's still the high bar, but I've been impressed. And you don't need to submit, you don't need to become a member to look at those write-ups. You can sign up for free just using your email address, and there's a 45-day lag time for when you can see write-ups, which is basically the same as when you're looking at 13F filings. There's a kind of a 45-day lag time from the end of the quarter before you can see what super investors own. So I'm very used to having to wait a month and a half before seeing what's happening in real time, so it doesn't really bother me. And as a long-term investor, those 45 days, they don't make too much of a difference to me. So check out VIC. It's an awesome resource. And finally, question 6. If you clone the gurus, you'll miss out on small cap stocks with huge upside. Are you concerned about this? It's true. The gurus tend not to own companies that have a market cap below 250 million. But, you know, small cap is, I think, considered anything below 2 billion market cap. So, you know, most of that range from 250 million to 2 billion, you can actually clone super investors for that pool of stocks. If you're under 250 million market cap, you're right, you're not really going to be able to follow super investors into those positions. I'm not concerned about it personally. There was a book called 100 Baggers written by Chris Meyer, and you know, it was a study of stocks that returned 100 to 1 over 50 years. I think it was like 1964 to 2014. And there were 365 100 baggers that he discovered. And the average market cap at the beginning of the period that those stocks were studied, the average started at like a $500 million market cap. Okay, so you don't have to be a super small company to get these multiple returns, these 10-bagger, 100-bagger returns. Monish Pabrai bought into Seritage Growth Properties earlier this year at a market cap of somewhere between 400 and 500 million. So, you know, that's still a fairly small company. It's still a small cap, but, you know, you could have cloned Pabrai for that. But, you know, to the point here, I'm focused when I'm looking at investment opportunities on what is the risk of losing money. Okay, that's really a kind of a Warren Buffett value investor approach. What is my risk here of losing money? I'm not looking necessarily at what is the potential upside. So if you flip that on its head and you're looking at companies with a market cap of, you know, 30 million, 50 million, 100 million, what is the risk of losing money on those? Well, typically they're a lot higher, in my opinion, overall, without knowing, you know, without calculating the intrinsic value and the margin of safety and all of that. That would be sort of the deeper dive, more, you know, accurate way to do it. But in general, those smaller companies, they tend to have more risk, and it's for the simple reason that they don't have as long of a track record to show that, you know, they're going to be great companies over the long term. So, and you know, the best way to have a feeling of safety in your investment is to be able to project with reasonable accuracy what the future cash flows of a business are going to be, so you can discount those back to the present value and figure out what the value of a share of stock is. And if you don't have much to look back on, it can be a lot more difficult to project those cash flows into the future. So that's one of the reasons it tends to be more difficult to accurately value these smaller companies. So, you know, I'm not worried about missing out by, you know, not having access to those companies below 250 million market cap, because there's also more risk, in my opinion. And that's more important to me than this fear of missing some upside. So that's it, guys. Just I want to answer those 6 questions from my valued subscribers. And if you have any questions for next weekend, please let me know in the comments. If you want me to expand on any of these answers or have additional questions about any of these that I've covered today, also let me know in the comments. I'm happy to do that until it's as clear as it can be for you. I'm here to serve you guys. So that's all I've got for today. I will see you in the next video. Take care.